Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about USDCAD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market, then we will move to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that the market has just created here a very strong impulse to the upside, followed by this correction. Now, in general, after an impulse, if you want to measure the correction, what we have to do is take our Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how the market has just retraced exactly to the zone that is in between the 50% and 0.618 of the Fibonacci taken on this monthly impulse, which is a quite strong level of support. If we extend this to the left, we can see how this is also previous monthly resistance, which is now turned support, therefore creating a confluence of support at this zone that we could expect the market to test and now to potentially reject to the upside. So here in the monthly, everything looks quite bullish. Now, if we drop down on the weekly time frame, what do we have? From a weekly perspective, we can notice how the market has now created this overextended M pattern. Now, in general, after the creation of an overextended M pattern, what you would expect is for the market to provide a potential rejection to the upside. Specifically, what we would like to see is for the market to retrace at least to the 0.32 of the Fibonacci taken on the daily impulse, in this case on the weekly impulse. Now, what we can see is that the 0.32 is exactly here, meaning that very soon the market will hit this first upside target, and then from here a bit of resistance should be found before then potentially continuing higher for the overall completion of the pattern at the neckline, and also for the rejection to the upside that we already wanted to see by looking at this market from a monthly perspective. Going down in the daily time frame, what do we have? Now here in the daily, price action is very clear. If we look, we had the impulse, correction, lower low, then a move to the upside, correction, and then the break to the upside. Now what this creates is essentially a W formation. If we look here, we have down, up, down, up. What we know is that after the creation of a W pattern, what we would like to see is for the market to complete the pattern at the neckline, so to go and test the neckline, which is previous resistance turn support, and then to reject the support to the upside. So what this means is that what we would have from here is a potential rejection to the downside for the market to go and test this area, and then to potentially reject this zone to the upside. Now, if we look closely, we can see how this would also go and test this previous support that would still be acting as support here, and would also give the possibility to this market to create an inverted head and shoulders, rejecting the support to the upside. So everything at the moment is pointing for this market to go and test this zone, which is a quite interesting area, inside of which, if the market will go and retrace to it, we have good probabilities of seeing the market create a rejection to the upside. Now, if you remember, when we were looking at the market, at this market on the weekly time frame, what we wanted to see is first short-term bearish price action rejecting the 0.32, and then more bullish continuation rejecting the monthly support. So here on the daily, we can see that that is exactly what the market, from the patterns that we have on the daily, is anyway expected to be doing and has a high probability of doing. Now, before we continue here with our analysis, let's first go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market, are doing. Now, first of all, we have to check the data for the CAD. The first thing that we have to keep in mind is that if we're checking the data for the CAD, we are actually already checking CAD USD because every currency on the spot is traded against the USD. So if you're checking the data for the CAD, you are already checking CAD USD. But since we want information on USD-CAD, we simply have to reverse everything. Therefore, we are already looking specifically at USD-CAD. Now, looking at the net positions, we can see how net positions have been decreasing, going from minus 29K to minus 56K, meaning that institutions have been shifting to the bearish side of the CAD, meaning to the bullish side of USD CAD. So what this means is that in the long term, we are seeing a shift to the bullish side of USD CAD from an institutional perspective. However, it is also important to keep in mind that with the last report, we have seen an increase of the net positions, making the CAD stronger. So what it means here is that with the last report, we can see how we got 300 longs added and 1.6K shorts getting closed. Now, this could create short-term strength of the CAD and long-term weakness of the CAD, as we can see here, because in the short term, the CAD is getting stronger, in the long term is getting weaker. Now, what this means for USD CAD is that we have a high probability of having a short-term weak USD CAD fueled by the strength of the CAD, and then a long-term strong USD CAD fueled by the weakness of the CAD, exactly as we have seen here from the net positioning from a COT perspective, so what institutions are doing. So first, we could expect a potential retest of this zone. Now, we don't know if the market will go and correct to this zone, but if we do get a correction to this area, how we could be approaching a potential rejection to the upside. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection to the upside for the market to potentially complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest you to go and check out transparentfxtrading.com. Here you have the possibility to get access to my entire courses with all the rules of the strategies. You also have the possibility to get access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the software that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here, you will see that at the moment there is a massive promotion in which you have both a huge upfront discount on the lifetime access price of the mentorship program, one-time payment for lifetime access from $497 all the way down to only $97. Plus, since we have partnered with the forex broker Blueberry Markets, if you want to open an account with them, after you join the mentorship program, using the link from your student dashboard, you can get a full refund credited back into your trading account. This is totally optional, just if you want to. So if you scroll down, you will see that directly from here, there is definitely a bit of time left, so you can still join directly from here to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. If you enjoyed the video, make sure to smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. And I will see you in my next breakdown.